Discover how to get investment from angel investors and venture capitalists in today's episode with Anmol Goel. He is the CEO of Gexem Ventures. And what's so special about Anmol is that through Anmol's Venture Studio, he facilitated 54.5 million in funding rounds last year, and he is launching his own venture fund of 10 million US dollars called Aryan Ventures. So tell us, Anmol, how can entrepreneurs get investment from venture capitalists and angel investors?
Welcome to Awakened Titans podcast with Lily Patrascu. Mind-blowing conversations with influential business titans sharing how you can manifest abundance, love, joy, success through quantum awakening, quantum manifestation, quantum healing, quantum miracles, exponential business growth, and innovative products and services.
Thank you very much, Lily, first of all, for having me here. I think it's super important for startups to distinguish venture capitalists and angel investors. So angel investors will technically come in just a step before VCs. So if I break down the steps and the routes that they have to go. So angel investors, you usually look at ticket sizes between 50K to 150K. So when startups are looking for angel investors, they need to be clear in terms of why they're approaching them and how they can get investment out of them. So with angel investors, they don't mind being pre-revenue, they don't mind being pre-MVP, because these are individuals putting their own capital at risk. But with the VC fund, it's a bit different. There are many VCs which will say, we invest pre-seed, but a big factor for a VC is you need traction. So traction in the sense you need to be generating revenue, you need to have a certain pipeline of clients, LOIs already signed, or you need to have some existing angel investor who's backing you. So when you're raising investment from an angel, you need to look at key characteristics of, have I got a solid business plan? Have I got a solid team of founders who are backing me? Have I found myself a demand and supply balance in the sense the product that I've built, are there potential customers out there who will buy? And from there, the next steps is when it comes to the VC world, whereas on top of that, well, are these customers already paying and am I already showing growth? Because VC is institutional investment on top of that. Also, in terms of the build size, well, the team that I have built, do I now have advisors on top of that? Because not only do VCs look at who has come in for equity as a co-founding partner, also on top, who is backing you as an advisor, right? A strong indication for a VC, for a startup is who else is backing them, and that's not just on the money side. This could be a ex VP from Google, Microsoft. If you've got a tech product, are they backing them and why? And then ultimately, in terms of the build side, ideally this is post MVP, or this is first or second iteration, which has already had some trials and some pivots. VCs would not, unless in deep tech is slightly different. We're focusing on software startups here. Unless that is the focus, VCs wouldn't come in that early. So understanding the market and the minimum criteria that is required for both is super, super important.
Thank you. What are the biggest mistakes entrepreneurs make when trying to get investment from venture capitalists and angel investors?
I think one of the biggest ones is they don't do enough sort of background research. They use the spray and pray method of, if they see the title of VC, they're just going to send an email, and they haven't done, research into, is there a startup investor fit? That means, does this investor invest in the same industry as me? So if I, for example, right, one of our theses in Aryan Ventures, our venture fund is going to be, we can only invest if one or more of the co-founders are of Indian origin. So, it's an interesting thesis, and some startups might miss that out. So, if the startup doesn't do the background research where they're looking into this kind of stuff, they will just send the deck and they will hope and pray, but it'll end up being not a fit. So I would say definitely do background research. also another easy way of finding out, does this investor invest into companies like me, is look at their portfolios. When you go onto any VC's website, you can have a look at past companies that they've invested in. 99% will have companies listed. So is there a company that looks like them? And then another thing I would say that startups tend to do is they will just email, paragraphs and paragraphs of breakdown, right? They will say, this is me, this is what I've done, this is my background story, this was my life as a farmer and tech guy, and this is what investors don't want to know all of that. Very briefly, I would say, have a short point intro where this is my solution, this is what it does, and this is how it does it. And then a couple of bullet points of bullet point one, this is the traction we've achieved, this is who we've been able to come on board, and the third bullet point of this is how much we're raising and this is how much it's done. If I can see in a quick summary view of clearly what the product is and what the numbers are, I will reply. But if you sent me a page-long brief, I don't have time for that, right? We get tens and thousands of emails and messages coming through. So keep it short, keep it precise, make sure there's a fit. And then the final thing I would say as my tip number 3 is have your data room ready. There's been so many times where I'm intrigued or interested by what the startup has shown to me, and I'll say, please feel free to send me the deck and the data room. And they'll say, can I do it in 2 weeks' time, or can I do it in 3 weeks' time? I mean, yes, you can, but by that time I've moved on, right? Some of the VCs, some of the top guys like Plug and Play Ventures, these guys are reviewing about 1,000 deals on a monthly basis. So, once they've replied to you, once the lead is hot and you're not striking the hammer, it's gone. So have your data room ready, which has your pitch deck, which has your financials, which has your legals, and which has data upon your pipeline and any sort of checks that have been given by founders and cap table and breakdown, and have that ready to go. So anytime an investor shows interest that they're keen to learn more, you can put the link right there and they can analyze and quickly get on the next call.
Thank you. What are the types of things that startup founders don't know that they don't know? So what I mean is that there are certain things that, let's say, you're aware that you don't know how to do, but there are other things that you're not even thinking about because they're not even in your awareness. What are the types of things that entrepreneurs tend to completely forget about?
Yeah. I think one of the first things entrepreneurs completely forget about is they can use their friends and family network to raise the first round and gather attention for. In the recent times, startups have sort of got this mentality of VC money is imperative. And as a VC, I'm always going to contradict myself, where it's like, we are not the integral part, right? There's been startups who have gone ahead and completely bootstrapped or sort of family funded and scaled to the top. So the first point of raising investment when that is needed is through friends and family. And an even better one is through clients. There's no better route of funding than client funding. If you from day one can generate revenue and are profitable, you don't need VC funding. So there is sort of this thought process of you have to have VC involved and get VC money very early doors. So I think that's a thinking which is slightly misleading. So if you can bootstrap it in the sense that you can be profitable from day one, focus on that. And then the second thing, if you do have to raise, I would say go through your friends and family network first, because no one understands you more than them. Part of VC investing is obviously taking a bet on the founder itself, right? Because the product is so early stage, you've got, a couple of $1,000 of monthly revenue. So we are doing a lot of due diligence on the founder and the founding teams themselves. But there's only so much you can find in that 3-4 month due diligence period and, 5-6 calls that you'll have. But as your family and friends who've known you for eons, they know you, they know what's best, and they've seen the growth. So if you can gather 100, 150,000 through that, utilize that network first, and then build and come towards VCs.
Thank you. What are some fast track creative routes to get investment?
Oh, interesting. I think the fastest track route is probably by having, traction. There's a funny thing in the VC world where people would say venture capitalists chase people who don't want investment, right? So in the sense that if a startup is doing super well and it says to a VC, "Oh, I don't need your money," a VC is almost like, "Oh no, I should give you your money because you don't need it. That means you're doing really well. That means my money will do really well." So if you can almost show to the VC that you're doing well off and there isn't an imperative need, I would say that's an interesting one. Um, I don't know if it's creative or not, but this is non-dilutive funding. So I would say a lot of the time startups miss out on how many accelerators or incubators or grant funding options are available, right? For in the UK, for example, Innovate UK, I think deployed close to about £80 million last year in startup innovation grants. So these are sort of some innovative, creative ways to gather funding, and you don't have to give up any equity on it. So look at your universities that you went to. A lot of universities like Imperial, Cambridge, King's, UCL, Uni of York. These sort of universities, they run programs for alumni or current students to gather 20, 30, 50K for early stage funding. So have a look at that, and then also have a look at your local councils. This is probably a bit more predominant in larger cities like London and a lot in the US, where there are local programs, and especially in the Middle East, actually. So we work quite closely with Qatar, the Qatari Research Development Innovation Arm. So they have grant programs of 25, 30K, where if you're able to solve certain smaller solutions, they're able to give you certain grants. So it might not be a direct one-to-one match, but it might be enough for you to gain further traction and access funding and prove certain things. This works out really, really well for deep tech companies, where they're, inventing different, tools, medical devices or pieces of hardware, where they can, utilize this kind of creative funding options.
Thank you. Where are the best places for entrepreneurs to find investors that fit their business?
Interesting. I think the number one place is, I think for us is LinkedIn and events, right? So if you're online and you can't go anywhere, I think LinkedIn, there's no better platform. Every single investor that does invest and is open to investing is out there. And LinkedIn has made it super, super accessible. You can use tools on top of that, like Crunchbase, that provide some more data on, what the portfolio looks like. But I think LinkedIn definitely. But I would say don't forget your local events. And for me, there's nothing better than that. It's meeting someone in person. Right. And, when we used to facilitate deals, we still do, but, a couple of years ago, 3 years ago, when we were sort of starting off, that was the best way, right? Speaking to the investor one-on-one and understanding what are the requirements they as investors look for, and also understanding what has gone bad in the investments that they have done in the past and what hasn't worked out. Right. So if you're in person, you can very quickly speak to an investor for 3 to 4 minutes and understand, okay, this is their thesis. This is what they ideally look for. These are the benchmarks that they like seeing. And this is what has gone wrong. And then create your sort of proposal, your investor pitch accordingly to that and go from there.
Thank you. What are the best ways to attract an investor's attention when you're emailing them? When you're sending them a cold pitch. And the reason I ask this is, for example, I'm sure you are bombarded by pitches on LinkedIn, and I wonder, do you really even look at them? Because you're so bombarded by so many different opportunities, do you even have the time to look at them? And the other thing is, for example, let's say if you get a cold email, then I think you're less invested as well. Whereas if someone's standing in front of you, it's like, you could sort of like ignore them, but it's less likely that you will. You at least pretend to be interested in what they have to say.
No, absolutely. I think you're spot on with that. I would say go through a warmer channel. So some of the times what a couple of startups have done really, really well, and which has resulted in me replying, is they'll say, Anmol, we're connecting through Bob Smith, right? So if I'm like, okay, I know Bob and Bob has recommended this startup to connect with me, okay, I should speak with them because I clearly trust Bob. So one of the things investors always love is, or prefer, I would say, more than love, is if you come through a channel that they trust. So a lot of times, like you sort of said, I will get emails, and a lot of times they'll just automatically go into spam, and I don't have time to look through everything. So I would say look at who's the close knit network of this investor. And I'm very active on LinkedIn, so I go to a ton of events. There's a lot of people. There might be my team. There might be wider partners, and general sort of events guys that I know really really well. So if you can connect with them, speak with them, and if they can do a direct introduction, which is, the number one thing, but if not, you can ask them, look, I'm going to be sending Anmol an email. Is it okay that I say I have spoken to you? And on the subject of the email, you can say abc.com connecting through Bob Smith, right? And I'm like, okay, I know Bob, and I'll open that. If nothing like that has happened and you sort of struggle to do that, then I would say probably in the title, put something which is a bold standout metric like traction. So you can say, again, abc.com raised 2.5 million from Fuel Ventures, now raising the next round. Okay, well, Fuel Ventures is a big name. I know they're one of the biggest VCs out in the UK. If they've clearly raised from them, they have some credibility. Let's have a look.
Thank you. If the startup doesn't have any traction at all, what's the most attractive way for a startup to contact an investor through LinkedIn in order to actually get a reply?
If they have completely zero traction, I would say don't. It's probably not the answer a lot of people want to hear, but I would say don't. Because a lot of time the investors won't reply, or even if they do reply, they'll probably hit you with the let's connect in 4 to 5 months. So I would say don't waste your time more than the investor's time, because the investor knows it's not a fit. And if you have done the research, you will know that this investor doesn't invest this early. So by messaging them, you'll only be making yourself look bad, because if there is a fit, we will reply, right? Most of the investors on their website has a sort of a button to upload your deck, right? We have that where you can submit your deck, and someone from the team, one of the analysts, one of the research associates, they will reach out to you if there is a fit. So if you have done that, you should wait the given time. We usually say we will get back to you within 2 weeks, and it might be a month. And if we don't get back to you, it's not a fit. So if you have done that already, wait your time. But if you have completely zero traction, then I would say focus on getting that first. Because if you just bombard the investors, there's almost this thing called this blacklist of investors, where a lot of us, investors meet quite frequently, and we'll just say, oh, have you also been spammed by this guy? And they'll say, oh, no, not really. Whom? And we'll say, oh, yeah, this guy, man, he sends too many spammy emails. So even before you start, you'll be on this quote unquote blacklist of investors where they'll say, oh, okay, if I see something from it, I'm just going to ignore it. So don't do that.
Okay. Thank you. Are there any specific platforms that you recommend aside from LinkedIn and emailing that entrepreneurs leverage in order to get a higher likelihood of an answer from an investor?
I would say probably not. I think, like I sort of said, the first vehicle of investment should come either from yourself or friends and family network. And then second way is then going to universities, grants, accelerators, programs, and utilizing the software network you have around you to make introductions, or using them to make introductions. So what I do a lot of times, and when I say LinkedIn, also LinkedIn Sales Nav, is if I've invested in a company and I need a co-investor, for example, and I found someone that is a fit, I'll have a look at who is a formal connection, and I'll just reach out to them and say, hey, can you make an introduction between us? This is what we're looking to do. If you can facilitate that, that's great. I think usually that is the most ideal. And then obviously you can there's scraping tools out there. I'm not going to really name any, which you can get emails out of. But I think if you really want to scale and grow it, I don't think it's the smartest way to go about it. Obviously, you can go on Fiverr and get someone in India or Bangladesh to get you 500 emails, and then, go run a program on Apollo and spam out the emails. But again, that's not effective. It's voluminous, and it's what a lot of the these wannabe sort of fundraising advisors will do for you. They'll just scrape all these emails, and will use the spray and pray method, which I sort of talked about in the start, to avoid. So you can do that, and it may get you a couple of replies, but I truly wouldn't suggest it. In the real fashion of raising money, quality is much better than quantity. So don't try and focus on, oh, if I can just go through 400 of emails, I'll make it. That's not what is advisable. 40 really good warm contacts that you've met at investment events, through accelerator programs, or through connections, or through your family's network, is much, much more recommendable than 400 emails you just got from a scraper and you're now going to cold email.
Thank you. What's the best way to flip the dynamic whereby instead of you chasing investors chase you?
I think a big thing for that is, coming on to what sort of PR can you build, right? What sort of noise you can create. As much as we as investors sort of hate to admit it, but there is that aspect of FOMO. So if you as a startup can create that environment and that fear of missing out, then investors would be super keen to come on board. And this comes from, sort of building traction earlier on. So if you're able to get a big name client or a big name partner, there are a few sports tech or entertainment tech companies that I've seen, out in the US, who signed Sofia Vergara, for example, as one of their investors. And so we spoke to them. I can't say the name, but they were a Canadian and Miami-based company, and they were a drinks company, and they weren't struggling. They were doing decent. I think they were doing about 2 to 3 million in revenue, about Series A stage. And Sofia Vergara was a very, very interesting marketing play, where her name gathered other investors, because they were like, look, she's not the smartest sort of typical VC investor that they might think of, but she's a big name and can market the product really well. She has good chains and avenues who can open up different pathways. So if you're able to almost create this buzz and this hype and this fear of missing out, then VCs are like, I want to talk to you. I want to know a bit more. Let me know how I can enter. So focus on painting the picture, as they would say, and create that atmosphere.
Thank you. So what I'm getting is that entrepreneurs, if they can, should try to get backed by a well-known investor, or to leverage a celebrity. Are there any other ways for entrepreneurs to make themselves really attractive to investors?
I think, anything outside from credibility is not really, because then you're sort of playing an interesting game of, sort of faking till you're making kind of thing. So, it's very simple, right? Investor will come for you, either if you've done really well with your startup, or you brought in someone really well for your startup, right? Aside from that, logically, it doesn't make any sense. You can win, a ton of hype awards, and you can do marketing and PR, right? People sort of do that, right? Where they'll go spend 50, 60K on a CNN or a Forbes or a Times magazine article, and cool, they'll bring in investors. But as soon as the investor starts to do due diligence and digs deeper, they realize there's nothing there. It'll scare them back away. So unless you genuinely have that credibility, and what you have is coming in through that credibility, I would say don't waste your time on that. Focus on how you can have, like I said in the beginning, revenue-led growth, credible-led growth. And then from that, naturally, the best of the best investors who are really interested and active will come in, because we are very active in the scene, and we like to sort of see what's happening. We're always digging, researching. So the guys who are in that industry, who do sort of do that, they will automatically find it. So unless you have artificially created that hype, we will find you. And we want to make sure when we find you, what you have said is actually there. So don't try to sort of, fake it till you make it, because then we enter the room and then we say, oh, well, I thought you were here. And you're like, no, we were going to get here. We've just reworded it. And then we go, okay, this is, not what we're looking for. And that gets shut down very quickly.
Thank you. Tell us where entrepreneurs can find you and how you can help them with their startup.
Yeah. So I think, again, I've said this again and again, LinkedIn. LinkedIn is probably the easiest way. or I would say in-person events. I tend to do a lot of events. So this month itself, I'm doing my TED Talk in Manchester next week. So, this week actually. So if anyone is in Manchester, a week after I'll be in Miami. Week after that I'll be in Abu Dhabi and Dubai, and week after that I'll be in Kenya. So if you see me at an event, feel free to have a chat and present. But I would say when you are reaching out to investors in person events, having chat, make sure you have your 2-minute pitch ready, right? We don't want to know about your life story. We can ask to know more, and then you can present. But there's been often times where people have just sat through, a 10-minute conversation. I still have no clue what the hell they're talking about. So get your 2-minute pitch ready, and then I would say LinkedIn definitely. We're very active on LinkedIn, so feel free to connect. I would say ideally if you can come from a warmer connection, because we probably won't accept anyone. But if you can come from a warmer connection of mine, again, it's not hard to find. Do the due diligence, go through them, and then get introduced. That would be most ideal. And in terms of what we can do to help startups, so if you're an early stage software-based startups who's looking to sort of raise and deploy, and you have early traction, we can look at incubating you in our venture studio investment arm, where we do tech for equity and sales for equity investment. If you're a later stage startup, sort of 500k revenue and above, we can have a look at syndicating that. And the fund that has recently launched and is sort of raising now, Aryan Ventures. So if you're a UK or US seed stage startup with at least one founder of Indian origin, feel free to apply. We're currently obviously raising out the fund, so we're bringing LPs in, but would love to have a look and have a strong pipeline to invest in over the next year or so.
Thank you.
Follow us for more interviews with world's most influential business titans, providing you with the insights to awaken to your full potential, so you can get paid to be yourself, find true happiness, and manifest anything you desire.